The following is a presentation of TFNN. The Bull Bear Binary Option Hour. Brought to you by Nadex. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom and Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien. I'm joined by my man Basil Chapman this morning. Basil, good morning.
Good morning to you. How are you?
I'm doing fantastic. How about yourself?
Very good. Thank you.
Good. So Tom, of course, is in New York. The Traders Expo taking place at the Marriott Marquis. That goes through today. I believe he even has a presentation taking place at sometime 11:30, 12 o'clock. If you're in the area, go give him a visit. Traders Expo, always a good time. Let's check in on these markets. We have a little bit of volatility starting things off. Dow currently up 18 points, trading 25,728. S&P's pretty much flat, 27.79. NASDAQ negative by 4, trading 74.16. So, Basil, it should be an exciting day. We have Fed Chair Powell. His remarks already released at 8:30. Some of what he's saying in terms of market volatility, not going to stop the rate hikes that they have coming in if they're seeing, good job growth, good action, good market acceleration. And with that, we have earnings season. We were talking about Macy's yesterday, and I was kind of chuckling to myself this morning as Macy's jumped up in the earnings, and they really delivered. They're up about 11% today as they delivered in the holiday quarter. So we should see where the day fares, and quite a day we saw at the acceleration. I know you covered the 4 p.m. hour yesterday for Tom. Quite an acceleration to end the day at the Dow, almost up 1.6%.
400 points, yes.
Pretty remarkable.
So it's very interesting. We're looking at Macy's is up $3.07 at 30.51, and my contention was that you cannot rule out the bricks and mortar retail stores, especially in the malls. People want to get out, they want to do things, and that they at a certain point we should see an amelioration of Amazon's tremendous strength as other companies start to improve their access to the internet and to people's ease of buying things. But at the same time, how does a company like Macy's, which had been absolutely stupendous, one of the leaders in retail all the way through the high of in July of 2015, when it went to $73.61, down to the low that was made at $17.41 just 4 months ago, and that this is going to be the challenge. But at the same time, I also mentioned to you that certainly in places that I've been to, when I go to any shopping mall, which is not that frequent, but if I do go to shopping malls, I find that they're packed. The cars, you can barely find parking. So people really do want to go. And
I was at a mall on Sunday. I was, and it was packed for sure. Yes. And
packed. So it's not just the getting out experience. And my assessment was that probably what we are seeing is the greatest expenditure of money, so that people are doing both the Amazon, but they're also shopping, and that the hit that most of the retail companies had taken, I'm waiting to see if that's going to change. And I think Macy's is telling us that they are attempting, and at least it looks like so far, they are succeeding in doing what they do best and having people appreciate what they do best.
Yeah, I mean,
think that's...
No, and I would agree. I mean, you can't refute what the numbers say, that's for sure, in terms of, so earnings, they came in 282 versus 271. Revenue, they were pretty much in line with 8.67 billion versus 8.68. But same-store sales, they saw a growth of 1.3% versus basically an expectation of 0.1% or zero.
Now, what is it? Is that taking in the holiday season, so we're getting the results, or is that a monthly?
That's the holiday quarter. And you know what, Basil? We're just going to jump over because I wasn't paying attention. We have our man Kevin Hinks on the line. So every day, right after this program, folks, swim lessons, Kevin Hinks, Scott Connor, the whole team at TD Network, they are out there with great programming. Kevin Hinks, good morning.
Good morning, guys. Good morning, Tommy. Good morning, Basil.
How we doing, man? Are you in New York at the Traders Expo?
I am not. I'm here in Chicago because of my duties on the network.
You're holding down the fort.
I'm able to go to New York, right?
Perfect. So, Kevin, quite a day yesterday in the market and acceleration. You have the Fed Chair Powell speaking today. His remarks already out. What are you looking at for the program today?
I'll tell you, Tommy, you only get one chance to make a good first impression.
Oof.
And it looks like Jerome Powell has passed his first test.
Yeah.
Which means he didn't do anything. He didn't make any major headlines, at least on his prepared statement.
Yes.
Now at 9 o'clock Chicago time, 10 o'clock your time, he's going to start answering questions. He'll read his statement, then he'll do Q&A. We'll see if he makes any headlines in the Q&A, but so far so good out of Jerome Powell.
Yeah, and he's been a Fed governor, so he's used to being able to answer questions in terms of, not making headways. I'm sure he's been preparing for this day. So we'll see what happens, but I'm sure, members of Congress are going to be trying to have their own political agenda, get him in line with what they maybe agree with the Fed chair. But it is interesting, as you say, a new Fed chair. We haven't had one in a long time. This is day one, his first remarks, his first kind of time in front of Congress, asking those questions. And with just the environment that we're in, trying to come off kind of a zero interest rate environment, you finally have some acceleration in the 10-year going up, and then you finally have some market volatility combined with it, right?
Right. I think the key for Jerome Powell, and I have to give Janet Yellen credit here. She was able to take a lot of volatility out of raising interest rates by guiding towards raises and being very transparent. And I think that set a new precedent for how these Fed chairmen are going to do it. I believe he understands taking some volatility out of the market is actually a good thing when it comes to interest rates. Yeah,
and it was interesting just the headline coming out with, market volatility is not going to slow us down on the rate hikes. And the market really didn't blink at that at all. I saw that pop up on CNBC, and I guess the market said, well, I guess that can be expected. We haven't had any volatility, and guess what? We just went down 10%, and we're back almost in the Dow. Yesterday we were up 1.6% alone. We've almost recouped everything, let alone the NASDAQ. I mean, are we above in the NASDAQ 100, maybe where we were? It's close enough, if not.
I think Jerome Powell is trying to find that balance where, this market, a healthy market, can sustain rising interest rates as long as they rise at a normal pace and don't spike higher. I think when you saw them spike higher a few weeks ago, that's when this market got jittery, and that's when you saw uncertainty come in. As long as these rates stay stable as they go up and go up at a measured pace, I think you're okay here.
So we still have some earnings season. Basil and I were just talking about Macy's, of course, beating. They're up about 11, 12%. What are we talking about on the program today, Kevin?
Well, we're going through a lot of the basic concepts of the Thinkorswim platform this week. Remember, we have a bunch of new clients coming over from Scottrade,
yes,
who are new to Thinkorswim. So what we're doing for them is using the show to go through education. Today we're going to do the trade tab and the monitor tab as part of our show, and we're going to show people how to use that. So
that's awesome.
New clients to TD Ameritrade should log on, and we're going to show you in depth how to use the.
That's awesome, because you say a couple clients, you guys got millions of clients coming over from Scottrade, man, and check out those monitor, the trade tab. I'm in there myself every day. Kevin, I'll be listening. We look forward to the show 45 minutes from right now, man.
Tommy, Basil, thanks for having me on.
Thank you. Have a great one.
Thank you.
Basil and I will be right back, folks. Come on back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, accurate active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionics, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated folic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. We take your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Tommy O'Brien, Basil Chapman. And where do we have the market? Let's see. We get the Dow up 52, S&P's up 4, NASDAQ up 6. So as Kevin was just saying, 10 a.m. Eastern time. You have Powell in there reading his statement, and then he's going to begin taking questions. So we'll see if there's any news that breaks as that happens. And I'm just seeing come across CNBC as well that President Trump has named his campaign manager for his 2020 re-election bid. Interesting there as well. And then you also have Hope Hicks, his communications director, testifying in front of the House Intel Committee, I believe. So lots of good action, lots of possibilities for headlines, which is kind of par for the course these days, right, Basil?
It certainly is. But you know what's interesting? You had so many very good questions for Kevin. I didn't want to interrupt.
Okay.
I did want to ask him one question, and that was, is he seeing more and more activity by the public in TD Ameritrade holding?
Yeah, and what is that number that they have? They have a number that it's a monthly number. I'll have to pull it up at the break, where they do release, you know, a monthly, and I'll pull it up. I forget what they call it. But yeah, there's powers in numbers, and for the amount of clients they have in terms of who is buying what, right? And if they are buying, yes.
Yeah, it wasn't just that. It's AMTD, which is trading at 59.68, up 2.83. I did some work over last night and early this morning for my subscribers to my opening call, and I love the fact that I'm looking at the brokers, and they are doing very well. And that's saying to me, for instance, I looked at TD Ameritrade.
Yes.
I looked at Schwab, and it's very interesting. Schwab has just spiked as well. It's up 147, up 2.74%. It's about the same percentage. And Ameritrade went to a new high, and Charles Schwab Company, SCHW, trading at 55.19, had a high of 56.25 on the 17th of February with a two-bar reversal at a peak D. Pulled back very sharply. It needed to break this trend line. I actually had it in my opening call today as a buy. We missed it because I thought it would pull back. There's no chance. It just yesterday it closed at the high of 53.73. Today's low was 53.74. It gapped up by a penny, and look where it is, 55.19. So I loved it, and I'm saying to myself, this is the phase where the public is just throwing up their hands if they haven't been in the market or they've been listening to news instead of looking at the charts and saying, oh, man, I've missed it. I've got to get in. I've got to get in. And I'm looking at this. There's another one which is
Interactive Brokers.
Yes, I am just trying to think. IBKR. I think that's the. Yes, Interactive. Also up today sharply. It's at an all-time high. Interactive Brokers. This is telling us something that the public is in, and if the QQQ, which missed yesterday going to an all-time high.
Yes, I pulled it up over the break. Pretty close, though, right? What did it hit yesterday? Well, it's at 170.17 even today, I believe. So 170.95 is the high, right?
170.95. And it looks like it'll only be a peak C if it goes above that.
Yep.
This is really very interesting because these V-shaped patterns, historically, as far as I'm concerned, with all the work that I've done, they invariably stall just about at the previous left side high. But I have a particular technique that says if they break, and especially in a V-shaped pattern, which is very different to a cup formation, because a cup takes its time to make that curve at the bottom, and then it takes its time as it makes a low, and then it turns around, and then it accelerates to the upside. Whereas a V-shaped pattern just plunges to the downside, and in an eye blink, it makes almost a retrace that is about the same number of bars to the upside as it is to the downside. In this case, with the QQQs, it's a little longer, but the technicals have really improved a lot. And my theory is usually that if there is a decisive close well above the left side high, and it can hold there for about 2 bars or 3 bars. It depends on what time frame you're looking at. I'm usually looking at the daily chart. That invariably says the speed with which you broke the left side resistance tells you that there's now raised support. But if it bumps up against that previous level and then stalls and then has a pretty sharp pullback, it says that's going to be very serious resistance. So for me, it's simple. Going to the 172.50, 173 area within the next week or so in the Qs is very positive.
Okay.
And if it sort of stalls out here, we've got to wait.
It's pretty remarkable on that monthly chart, too, that we're looking at a positive green bar, right? I mean, pretty amazing that you just have the tail because it's all in 1 month that we got a complete decline from 170 to 150 and back
18%.
up.
Right.
And we're going to close
back up.
positive for the month. I mean, if we hold out where we are, but pretty remarkable.
And not only that, it decisively took out 3 months worth of left side action. The low that was made back in November was 150.77, and we went to 150.13. And here we are at the highs. This is definitely a sign of a market that the monthly chart and now the weekly chart have shown the kind of strength that is very unusual. You look, even when you go back and you look at the low that was made back in August of 2015 when it went to 84.74 after being up in the 114 area, it took a while to really establish a low, and then that was that internal low with the residual low or the earthquake with the after tremor, which was higher than the left side low. But this one was in 1 month. As you say, this is quite remarkable.
That sure is. And just to touch back on the news, I'm just seeing it again on CNBC. So it seems that President Trump, so is the Drudge Report reporting that he is going to tap who was his previous digital director, Brad Parscale, to run his campaign for 2020. And it seems like that would make sense. Digital is the arena that seemed to do so well for President Trump.
Yes.
And that would be something that he's going to capitalize on again. And just in my mind, I thought, you know, I wonder if that's going to push to the forefront yet again, though, the woes of Facebook, Twitter, and so forth in terms of...
It's here to stay, so we just have to face the fact that this is going to grow. It's not going to ever get smaller.
Oh, for sure.
This is forever.
That's, you know, the internet is not going away, right? Our lives...
This is one of those century moves. You know, you go to the 1880s and you've got the automobile, you've got electricity, you've got different kinds of heating, you've got airplanes within 15 years about to be invented, and you've got a whole 100 years of that. Then you've got the turn of the century going to the late 1900s. You've got the internet, you've got solar power, you've got energy efficiency, you've got a whole bunch of things. This is the era, the 100 years, that should see the maturity and development, and you know, this is it. This is a tidal change.
And with that, just jumping over, because I envision that this is going to put some more heat on Facebook, just as in, you know, they're not going to be able to ignore the fact that it is a digital arena. And in terms of political ads, they should be facing the same types of scrutiny that any type of ad, whether it's on NBC, TV, radio, because like you say, it's here to stay. Facebook down almost 0.8% today when the market is up. Come on, folks. Come on back, folks. Basil and I will be right back. 3 minutes.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
It's a special month at TFNN, and with market volatility back, we've decided to hold an open house in our Tiger's Den. For this month only, you can get a full 30 days of Tiger's Den membership without paying anything. The Tiger's Den is our interactive chat room where you can chat with other tigers and tigresses along with the TFNN hosts during each of their programs. For all of the details and to start your 30-day free trial to the Tiger's Den today, visit the front page of TFNN.com before this deal is gone.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. I'm Tommy O'Brien, joined by Basil Chapman. Dow Jones up 55, S&P's up about 6, NASDAQ positive by 12. Yeah, so it's interesting that you have Powell out there and the stock's kind of remaining calm, and maybe that's just kind of the calm with yesterday's action taking a lot of energy out of the market, right? You had the Dow up 1.6, 400 points, quite a remarkable run, especially off the run that it's had recently, almost pulling back all of the losses, even the Dow. I mean, we're not quite there, but pretty remarkable from where we were only 2 weeks ago. And to put this on a daily basis, you know, we're up at 26,684 on the Dow, and now we're within 900 points of where we were on those highs, and we almost traded down to 23,000. We're up 2,700 points on the Dow futures. Pretty remarkable. So maybe a little calmness, and maybe, you know, the expectation is Powell probably handles himself pretty well. It's not like somebody new coming into the Fed position incompletely. He's a former governor, and so no expectations. He, I'm sure, is prepared for this day.
And he knows the rules.
That's exactly. You know, he is prepared. He's not a novice. He understands Fed speak, as they would say. And it will be. You know, one thing I was thinking about, Basil, as you were saying, you were talking about TD Ameritrade and kind of some of the equities. Our man David White was in the den yesterday at some point, and I remembered him saying, if you're not buying highs, you're not trying hard enough, right? And
I know, but I think he was being facetious.
Oh, he totally was, exactly. And thank you for he was. And that's why I got a good laugh out of it, and that's why I remembered it as you were saying it, because it's a scary notion, but it's a true reality in terms of what is going on for a lot of investors right now. And there's a lot of hype that this will continue to the upside, and you just have to be careful when you see that type of 10% decline to be buying highs, but we're right back up there. So it almost just reiterates the notion that you can buy and always be rewarded, because, man, when you look at, we won't even have a down monthly bar, and meanwhile we had a 10% correction. Pretty remarkable.
Except for one little thing.
Yes.
I always say, even at 5 minutes to 4, the day is young.
Oh, very true. And
one of the reasons is that it's not as, we haven't seen it quite as much as we had seen it years ago, but the expression came because there were periods where the market just didn't do anything, and out of the blue, the 10 minutes before the bell, there was just incredible buying or selling. And, you know, you're patting yourself on the back on a great trade, and you look away, you go to a bathroom, whatever it is, and you come back and say, what happened? Either up or down.
Yeah.
So that's what. But we were asked, Danny in the Den wants to know about the euro.
Okay.
Sorry, the yen, I think it was. Oh, the yen. So I've got the USD JPY here, and I've got it in the format that I like. I've got on the left the daily, in the middle is the weekly, and on the right is the monthly, but now I'm holding up the 120. And what I like to do is to take a previous high. In this case, it was the high on the 120-minute chart at 3 o'clock on the 22nd of February. And I like to just grab that, and I'll drag this to the midpoint. And this is a different midpoint. It's not the lowest bar. And he wants to know where do I think it's going. And my assessment here is that there's a good chance that the 107.60 level that was made at that particular time in this particular pattern, look, it looks like an inverse head and shoulders. Finally, the USD JPY, the dollar-yen currency pair, is showing a little bit of strength. Not enough, but it is a change of trend because it's just been mercilessly down from the 115s to the recent low in the 105s. So this is a nice reaction, little change of trend here. And so I'm actually now going to move it a little bit to the right because I like to, if I can, I call it the plumb line. I'd like to take the plumb line. And that says, yes, by tomorrow, there's a chance that the yen, which is trading at 107.33, could go to the 107.60 level. That would be the next resistance. But if it does that, 107.67 is the 200-period exponential moving average in the 120-minute chart. That would act like a magnet. As soon as it needs to get to the 107.50s, and then all of a sudden, instead of repellent, this line becomes a magnet. And if I can, because we love to teach here, to talk technically, you can see that since the yen broke down back on the 5th of February, when it was trading at about 110, it pulled back all the way to 105, and it could not even hold near the 200-period exponential moving average. So it's like, people talk about gaps, they talk about certain candles, dojis, etc. And for me, this is the kind of, it's as if you're driving from Boston to New York. You don't even have to think of how the distance left until you get to, say, New Haven, and then you can say, aha, now I'm really close. And this is like New Haven right now. It needs to get a little further, and we're looking at the magnet of this 200-period moving average. So it's the first time it's acted like a magnet, which implies that it should touch that level because the technicals are very good. So I just wanted to tell Denny, it's looking very good right now.
Nice. And so to give a quick little plug, you heard Basil Chapman talking about the Den question. So we have the open house going on through tomorrow. It's amazing that tomorrow is the end of February. Quite a month. We've seen some market volatility that's made things fly by. So Tiger's Den open house, you saw it right there. Den questions, you get to talk to all the hosts. We got a bunch of great tigers, tigresses in the den all day. And you can sign up, get 30 days free. Come on over to our website, sign up for the Tiger's Den, and you'll get 30 days free of charge. Get in there. You can be talking to the hosts and check out that Tiger's Den membership. Gotta love it for sure.
For sure, yeah.
So, I was jumping around, Basil, and right now we're getting a little action on oil as well. Let me pull my chart up. And as we speak, so oil right now, as I'm pulling it up, I was just jumping around a few commodities. I jumped on the Nadex platform. I was going to take a look at maybe some of the Bitcoins as well. But even since 10:20, we were up at 63.80. Oil is declining a good 50 cents. And we got quite a run up last week on the EIA numbers. And we were talking about it a little bit yesterday, and it's accelerating a little bit to the downside, and gold as well, continuing to accelerate to the downside. Now, gold could especially see some volatility when Powell starts taking some questions, if he surprises the market at all in terms of interest rates. But it is somewhat intriguing that even just as of 8 a.m., we were up at $13.34. We're now down $10 in the last 2.5 hours, and it's kind of not stopping as we speak. And crude oil as well, kind of just continuing to decline. And of course, that plays into currencies, crude especially, commodities, any commodity, but quite an acceleration as we even speak, continuing to decline.
Tommy, what do you have crude oil trading at right now?
Excuse me. So crude is trading at 63.22. I'm looking at the April contract.
Okay, because I've got a 120-minute chart peak D right here at 2 o'clock. Yeah, on the 26th. So it's for a couple of days. It's just been kind of pulling back a little bit. Now it's accelerated to the downside with the technicals.
Yeah, I mean, I'm looking at 5-minute bars, and they just happen, they stick out like a sore thumb in terms of in the last 10 minutes, we're down a good 50 cents from 63.70 down to 63.20. And gold, different story, of course, with gold, but gold has just kind of been a steady decline from the overnight session. We're up at 13.38 at about 10, 11 o'clock last night.
Crude must hold 63.
63. All right, we got 23 cents to give it some juice. And with that, the market declining as well. S&P 27.79. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. I'm Tommy O'Brien with Basil Chapman. Market kind of calm. Dow down about 8. S&P's relatively flat. Nasdaq down about 3. But as that was happening, and I'm jumping over, so there was a little bit of a decline, and even I had gold up there now, down 13.22. Crude continuing now at 63.17, Basil. So we're at a 17-cent cushion now. Bitcoin kind of having some volatility as well, but I was just going to make note of the fact that the S&Ps alone from about 1025, we're looking at a good 12-point decline, almost 0.5% in about the last 20 minutes. And, you know, NASDAQ 100, a little bit of an acceleration in terms of about a 27-point decline. And Dow 30, you're looking at about 100 points, 110 points off its high. So, you know, that's stirring, and you know, it'll be interesting to see as the headlines come out in terms of the Powell, the questions, or maybe just the market coming to a realization that, man, we had quite a pullback from those lows, and we might need to breathe a little bit.
That's a very good point, because this V-shaped pattern, you had mentioned the retracement that the Dow is still 900 points below its high.
Yes.
What I want you to mention, just let me quickly show, the TNX right now is up 20 cents. It's the 10-year. It isn't breaking down. It made a peak E. It's pulling back. The technicals are weak in the daily. The weekly chart is still very strong, and the monthly chart is broken out actually from a 30-year declining channel. This is the first time we've broken out like this. So I'm not going to ignore the interest rates at all. I think it's still a factor. And my weekly chart of the 30-year is only in leg C, and that suggests it should still go higher. But what I wanted to show you is this. Look, if you're looking at the IWM, which is the Russell 2000, from the bottom at 140, I checked it out, 42.50, that was made on the 9th, that was a 20-point decline from the 160 high. You know, 20 points, that's there again. It's like the Qs. It's close to the 18% level.
Yes.
But now you've rallied, and you've already moved into a leg D. Instead of just being at a B or a C with a massive move to the upside, this is already at a D. And the technicals, while they're very good, you're not getting the price appreciation. And that's why I've been saying to my subscribers, we've got to be a little careful. Today, in fact, we're kind of in a cash position. We do have longs. We like we'd like to buy certain stocks at certain levels. But we've still got a short position in the home builder, and that's doing very poorly. And so I think you have to be very careful. When you look at the NYA, which is the very broad New York Stock Exchange, it's made a peak C, but this is like a 50% retracement. It should be much higher. So you can't, I don't like the diversity of looking at sectors and then saying, oh, wait a minute, the Qs are, that kind of divergence makes me a little nervous when the Qs are just under the previous high.
Yes.
Very, very strong. The SMHs have been very strong. We were short. We took very nice profits, and then we just stepped aside, and now it's made a new all-time high. But you can't, you know, it's that expression, you can't have the soldiers lead without the generals, or you can't have the generals lead without the soldiers. You need, it's better to have everything in unison.
Sure.
And we're not quite getting there. So I don't think it's just, it's all rosy right here. It's very selective. So the selectivity is what's very important. Stock choice and sector choice is very, very important here.
Well, you always do such great work, Basil. I'll give you a little plug. So if you'd like to get Basil's newsletter, get over there. Newsletters, active newsletters, trading newsletters, and you can try out the opening call 30-day money-back guarantee for all new subscribers. And Basil, you do a great job. So many charts in there every day. And of course, as well, you know, your CD introducing the Chapman Wave. If you just go up to the Tiger store on the front page of TFNN, you'll see Basil's CD right here introducing the Chapman Wave methodology, where he walks through his entire trading methodology that he uses to trade the market. So I encourage people to check it out.
Thank you.
Definitely. So some news also, and I have too many tabs. There's too much going on right here. Here we go.
Yes.
So how about, did you see Apple launching their own medical clinic in terms of AC Wellness? So it's going to be for their employees initially, with their employees and their employees' families, with 2 clinics in Santa Clara County, California, acwellness.com. And this is seen as, you know, their first step into maybe competing with the likes of the new venture that Amazon, JP Morgan, Berkshire Hathaway just kind of put together for healthcare. And, you know, it makes sense, and in terms of Apple being such a huge company, that they could just open a service for their own employees, which would allow them to test out the market before bringing it.
Are we looking at this as some kind of back to the old days where, you know, the GE employers had their pension plan and all that? So Apple might be leading the way in looking at the future and saying, we are able to offer you a plan. It's not a pension plan, but it's actually a health plan.
Yes.
To make it look as if, you know, it's a benefit that we can offer you, and this is something, as long as you stay with us. I'm not sure if they're going to make it transferable, but at least while you're with us, you know,
I would agree, and I would say it's going to be quite a perk. Exactly. I mean, you know, it's from some of, I was reading through this earlier, and they have job listings up, you know, posting for, and part of what's included in the job listings on Indeed are multiple stunning state-of-the-art medical centers. And, you know, you don't put it past Apple in terms of the amount of cash they have, you know, top-of-the-line facilities.
Right.
They have the ability to compete with some of the best hospitals out there with the cash that they have. So that would be quite a perk for sure. And then, let alone the capability that do they decide to bring that to market once they perfected it, right? And maybe they have their own little sector where they have their own facilities, but then they have the framework in place to start bringing greater facilities across the country or so forth.
Once again, private enterprise is showing the government a different way. It's going to be very interesting because maybe this is what we need, because healthcare costs, you know, an MRI machine, which probably these days is already old-fashioned, but we're talking multi hundreds of thousands to be able to, and you can't just have one, you have to have 2 or 3 in hospitals. That's just one implement, one instrument. And the cost of running these organizations is so great that healthcare, especially with the fact that we've turned the triangle upside down, it's you guys that are going to be supporting us, older guys,
sure,
as we move along, because the boomers, you know, this is a huge triangle on the other way around, where young people are being outnumbered by the over 60s.
It's pretty remarkable, and the costs are just staggering. I agree in terms of, and you know what, it's just staggering in terms of that the costs are staggering. The cost that they push to the consumers, because the insurance environment where it's third-party payer, you know, Tom and I talk about this, where there's no price consciousness whatsoever at all, because it's all third-party payer type system billing. Yep. And there's lines, endless lines, right? You know, in terms of you still have to wait to get into a machine to pay thousands of dollars for that service, which is just a remarkable. And you know, it follows right on the heels of you know, another technology leader, Amazon, teaming up. So it's not a coincidence that you have Amazon, you have Apple, both going into this sector. I mean, they realize that there is the ability for improvement, and that's what competition does. You know,
and they have the price effectiveness because of their numbers.
Right, and they have the cash flow. Right, exactly, everything. Okay, folks, come on back. We'll finish up the show, and as we speak, market getting a little bit of a bounce, but S&P is now trading 27.74 off the highs of almost 27.90. Basil and I will be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archived workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. Learn how to trade options with swim lessons. Brought to you by TD Ameritrade Thinkorswim. Next on TFNN.
Folks, Tommy O'Brien with Basil Chapman. Basil, things are starting to get a little interesting on the S&P. We're now at 2769. Yes.
This is what I said to subscribers, because my anticipation was today would be a consolidation day. And here I show the Dow. This is what my subscribers get every morning. This is just one of the many charts. This shows the Dow in two One is with no moving average, no MACD and stochastic on the left, and just analysis of the Chapman wave methodology. And on the right, it's the same thing, but it includes the MACD and stochastic. And what I had said is, so Dow daily, and then I give a whole summary of what I'm expecting. And then I said, today, if at 11:10 a.m. the Dow is minus 50s or more, there's a good chance that a daily peak C will form. If early weakness turns into late strength, that would be very good action. So we're going to have to see. Do we now get strength? Because I'm anticipating if there is a pullback, it should last into sometime Wednesday, maybe even Thursday. But this is going to be a very important period because of what I discussed with you just a moment ago with the Russell 2000s getting to a D, but not really accelerating like it should. And even the Dow is still 900 points away from the all-time high. And, you know, we're talking about the, just a moment ago, we're talking about the, where did it go? The USD JPY and the target I had on the left side based on the 120-minute chart. And let's just see, because I think it's starting to move. I don't know what you've got. I'm a little behind. So I was looking at the 120-minute chart, which said it should, oh, it just took it out.
Look at that pop.
So there's the target. The first target was 107.60, and I spoke about the 200-period moving average acting like a magnet, and boom, it just touched it.
Well, Basil, you got a month to, a month. You have an hour to take a breather. We'll see where the market goes, and you'll be back here, and I'm sure we'll have plenty of action with this market as we got volatility both ways. Thanks for joining me, as always.
Thank you very much, Tommy.
Definitely.
Always enjoy it.
Stay tuned, folks. Great hour of swim lessons with Kevin Hinks coming up. Basil back here at 12 o'clock. Great day of programming all the way through 6 o'clock. Have a great day.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.